UK inflation accelerated less than economists forecast in June, rising to 2.9% according to data released this Tuesday. Alvin Tan, FX strategist at Societe Generale in London, is on the phone with me now to discuss this data and its impact on the pound sterling. Alvin, today's data appears to have provided a fractional respite to the pound's purchasing power. Can we see this as a positive day for the UK economy?
Yes, in economic terms, the broadly under 3% CPI inflation UK has experienced since the middle of 2012 is positive for UK households and consumers. Nonetheless, it remains too high. Many British workers are steadily losing purchasing power as a result of inflation remaining persistently above 2% a year.
Not only did today's figure save Mark Carney the embarrassment of having to write a letter of explanation to the UK government, but also provides the new BOE governor with more room for manoeuvrability to introduce measures to depreciate the value of the pound sterling. What do you see happening over the coming months?
Well, Governor Carney certainly did not waste any time in signaling that he is ready to pursue forward guidance during the last MPC policy meeting on 4th July. Note that Governor Carney only assumed his position on the 1st of July. So it was quite a rapid turnaround in terms of BOE policy making. At this point, we are still very short of details of what exactly forward guidance will entail in terms of the UK. We do not know the duration of such a policy. We also do not know if it will be based on certain macroeconomic variables, for example, the unemployment rate, which is what the Fed looks at in its QE policy. But we should hopefully get some more details on the MPC's thinking about forward guidance upon the publication of the minutes from the July meeting this Wednesday.
The pound weakened against both the euro and the dollar following the release of this data. How long do you see this bearish trend lasting?
We are bullish on the US dollar through the end of this year. We see the US economy on a sustainable recovery path, and this will push the Fed to start tapering its asset purchase program starting September. And as the Fed starts to taper, we see, on the other hand, the ECB and the BOE maintaining forward guidance policy. And this resulting monetary policy divergence will lift the dollar higher against both euros and sterling. But in terms of euro-sterling, we do expect euro-sterling to decline gradually over the course of the year. Given that the UK economy appears to be doing much better than the euro area economy, and also our economics team expects an additional ECB rate cut at year end, and this will pressure euro lower relative to sterling going forward. So in sum, we see sterling losing ground against dollar, but it should gain some ground against euro into year end.
And lastly then, Alvin, what is the next item sterling watchers will be keeping an eye on?
Well, in terms of the monetary policy front, there is as I mentioned earlier, the MPC minutes coming out on Wednesday, which also coincides on the same day with Chairman Bernanke's congressional testimony, which will be important for dollar direction. Then we do have the MPC policy meeting on the 1st of August, where it is likely to introduce forward guidance policy. On the economics front, for the UK, pay attention to the manufacturing and services PMI surveys out in early August for indications of the UK economic trend, namely whether the apparent recovery in the UK is strengthening.
Alvin, many thanks for your comments. For more currency market forecasts, Deera McDermott will be bringing you a Targets in Focus interview tomorrow, so stay tuned to Dukascopy TV.